ladies and gentlemen, and welcome back. Did you miss me while I was gone? Now, I would love to keep you updated on where I was and what I did, but as your friendly neighborhood PM, that is not my job here today. And as always, we'd rather knock out these top 3 points of the week so we can get you on to your weekend. So without further ado, let's dive right in. At point number 3, it was Adobe releasing their earnings yesterday and falling close to 14% on the report. Now, Adobe did beat on earnings and revenue. However, they issued weaker guidance than expected heading into 2025, and that frustrated investors. Now, you're probably questioning, well, why did that frustrate investors? Well, first off, nobody likes to see lowered revenue and profit guidance heading into the new year. But on top of that, investors have continued to get more and more frustrated with the company as the expectation that they would provide better monetization on AI from their flagship AI product, Firefly. And the past couple quarters have shown that they're continuing to struggle with that. So further weaker guidance heading into the future does not bode well for that. And subsequently, the stock was severely punished for that yesterday. Now, point number 2, it's another company that released earnings, and they had a little bit better of a story. So it was Broadcom releasing their earnings yesterday. Now they beat on earnings per share and revenue, but the main driver for them, which is up close to 17% today, is the fact that they grew their AI revenues close to 220% year over year. Now, that alleviated a lot of fears from investors worrying about a potential slowdown from a key customer, aka Google. Now, it shows that there's continued strong AI demand from chip makers, and Broadcom is really taking control of that tailwind that's occurring in that space. And then finally, at point number 1, you might have guessed, you might not, I'm a stickler for this, but it was inflation data, CPI coming in earlier this week. Now, core CPI increased by 0.3% in the prior month. That is right in line with expectations. Now, we did see a slight increase in core goods, primarily from home furnishings and new car sales. However, a key component of this, shelter, which is in the core services component, did show some continued moderation. Now, shelter makes up a huge portion of inflation data, and that is one of the stickiest components, and we always see some lagging effects of moderation in that area. So seeing a decline in that is actually a very good sign for a lot of investors and the economy, and that does kind of give the Fed more and more breathing room should they make further policy decisions. Now, that does it for these top 3 this week, but that also parlays perfectly into next week because, well, next week we're looking at the Fed rate decision. So, like I said, inflation plays a key part in that. The labor market plays a key part in that. But the fact that we saw a moderation in that shelter inflation data does allow the Fed a little bit more wiggle room to continue lowering interest rates. Right now, we do see the Fed potentially lowering interest rates next week by 0.25% or 25 basis points. Now, once again, Chairman Jerome Powell has decided and articulated out to the markets that he's going to take a very gradual and cautious approach when lowering interest rates and not going to take them in very large magnitudes. So as the data flows in and the Fed feels comfortable with that, we'll see rate cuts accordingly. Now that does it for this week's video. But as always, if you have additional questions, please reach out to your financial advisor or dig into the written weekend review. But as always, please go and enjoy your weekend. And it's starting to get cold out there. So bundle up, stay warm, stay safe, and have a great weekend. And we will see you the same time next week. Thanks again. Bye.